Well, the merger between Capital One and Discover has apparently been completed. So, what does this deal mean for the consumers as well as the firms themselves? Pleasure to be joined by Paul Nary, who is assistant professor of management here at the Wharton School. Paul, great to talk to you. How are you?
I'm doing great and really happy to be here chatting with you today.
Thank you. Look, this had been kind of in the mix for a while. But when you think about these two companies, I think a lot of people look at Discover as maybe the one that was kind of ripe to be the target. Fair to say?
Perhaps. They were definitely approached by other potential acquirers before. They were all, one of the smaller, quirkier competitors in the space. So certainly there has been chatter about Discover being a potential target prior to this transaction. Now, based on the conversations that I've had with some insiders in the filing so far, it doesn't look like they took any of those prior potential transactions, more further than just casual talks. So this was really the first serious deal that they considered, at least in the last couple of years.
So then, which side then gains the most from a deal between Capital One and Discover?
Well, I think the shareholders of Discover, because they're getting a reasonably nice premium, although this was an interesting deal in that it was a stock transaction where there wasn't a lock on the share, in case the shares of one or the other companies moved too much. But overall, I think the shareholders are getting a nice premium, and Capital One is getting a really interesting asset that comes with a lot of opportunities, but also quite a few challenges for Capital One as it tries to put this transaction together.
Such as what?
Well, this is a huge transaction, and these are always highly idiosyncratic in both the opportunities and challenges that they offer, but also just the sheer complexity of integrating two companies that are worth tens of billions of dollars with all of their employees' assets, processes, systems, etc. So integration here is going to be critical for Capital One because much of the benefits of this transaction that it foresees, whether they're real or not, are based on integrating the two companies together and making joint use of some of the shared assets that they have.
And I guess the area of payments networks in general is just a very interesting one to keep an eye on and see how it continues to develop as well.
Yes, absolutely. And again, it's an area with a lot of challenges and a lot of opportunities. From Discover's perspective, they're a small player in the payments networks. They're still below, I believe, 4 or 5% of the global payments volume. So they're a tiny player next to Visa, MasterCard, and American Express, all of which each of which has more than 20% market share in the space. So they're a small player there. You don't hear a lot about Discover, but payments certainly and vertical integration have been ongoing themes in the space, for better or worse. For example, you can look at the transaction just a few years ago of FIS acquiring WorldPay, which was a payments company, a similar vertical integration move. That was a $43 billion transaction that failed within a few years. And if I remember correctly, FIS had to write off at least $17 or $18 billion, not to mention other losses and costs associated with this transaction. So that was a $20 billion loss of shareholder value from a similar transaction, a financial services company trying to vertically integrate into the payment space.
Whenever you see a deal like this, usually the questions come from Capitol Hill about reducing competition. Does this deal significantly impact the consumer, especially of these two companies moving forward?
I think it's actually going to be great for the consumer. It's not creating any kind of a monopoly in the space. And if anything, it's giving additional resources and support to the fourth player in the payment space, that is Discover. So if it actually strengthens the Discover network, it may create more opportunities for customers. It's probably going to spur some competition from my perspective, because now there is going to be competition for, both on the merchant side as well as the customer side. So if anything, I think for the customers, we'll see more promotions, more bonuses, as not only Capital One tries to make the most of this transaction, but also as American Express, Visa, MasterCard, and other banks, Chase, of course, with their credit cards, the largest player, try to compete with this newcomer. So there's going to be some reshuffling, and I think ultimately the consumers will likely benefit.
And I read that I guess if you're a consumer of Capital One and have a card with them, it sounds like Capital One wants to move their cards over into Discover's space. So consumers probably do have to be aware of some potential changes that could be coming up in the future.
Yes, so this will be interesting. So as far as I know, Capital One will switch some of their cards to Discover, but not all. From what I understand, they're planning to switch their debit cards for Capital One Bank customers to the Discover network, which will likely not create much change for the existing customers, especially the US-based customers. But from what I understand, they're planning to, and this is one of those idiosyncrasies and complexities of this deal. From what I understand, Capital One is planning to switch their lower end or more sort of US-centric cards to Discover. But from what I understand, they're planning to keep their higher value, sort of higher end cards that are used by international travelers, etc. They're planning to keep those on their existing network, primarily Visa, I believe, because as of right now, and this is another challenge for Capital One, Discover does not quite have the network of Visa, MasterCard, American Express overseas. So in order not to alienate those customers who are using their cards globally, who travel a lot, who need access, Capital One would need to keep those cards on the bigger payments networks, at least until they figure out a way to make Discover accepted more widely internationally.
Paul, great to have you with us today. Thanks very much for your time. All the best.
Yeah, it was great being here. Thank you.
Thank you. Paul Nary, who is assistant professor of management here at the Wharton School.